Hi there. In this video, we will tell you how to work out VAT in 2026 to avoid HMRC errors that trigger costly penalties.
Running a business in the UK, then you absolutely have to get your head around three little letters, VAT. Getting it wrong can lead to some pretty stressful letters and penalties you really don't need. But get it right? Well, that's a complete game changer for your cash flow and for your peace of mind. So today, we're going to break down exactly how to work out VAT in 2026 so you can feel completely in control of your business finances. This quote, well, it's a story we hear all the time. Just picture it. A cafe owner up in Manchester, absolutely brilliant at making the perfect coffee. Thinks they've got all their finances sorted. Then, one morning, a brown envelope from HMRC drops on the doormat. And suddenly, that sinking feeling kicks in. It's an incredibly common scenario, but it's one we are absolutely going to help you avoid. And that's exactly why we're here. All the information you're about to see has been put together by the expert tax advisors at My Tax Accountant. Honestly, they live and breathe this stuff every single day, helping businesses just like yours. So you can be sure you're getting clear, practical advice to help you handle VAT with real confidence. So here's our game plan. We'll start with the absolute basics of VAT. Then we'll dig into the core calculations you'll be using day to day. After that, the good bit, we'll look at how to reclaim that and get your money back. We'll also clear up the difference between zero-rated and exempt supplies, and we'll finish up with key deadlines and common mistakes you'll want to avoid. Right then, let's start by building a really solid foundation. Even if you think you know this stuff, a quick refresher will make sure we're all on the same page. So, what on earth is VAT? Well, to put it simply, it's a tax on things people buy. When your business is VAT registered, you basically become a tax collector for the government. You add VAT to your sales price, which is called output VAT, and then you pay what you've collected over to HMRC. It's a massive source of income for the country, which is precisely why they take it so seriously. Okay, this is crucial. Not everything is taxed at the same rate. The standard rate, 20%, is the one you see on most things, like a meal out or a new laptop. But then you've got a reduced rate of 5% for specific things, like your energy bills at home or children's car seats. And finally, there's a zero rate, 0%, on essentials like most basic food, books, and kids' clothing. You don't charge any VAT on these, but they are still technically taxable, and you'll see why that little detail is so important in a bit. Right, this number is absolutely vital. For 2026, the mandatory VAT registration threshold is £90,000. If your total sales of taxable goods and services, your taxable turnover, hits this amount in any rolling 12-month period, you must register for VAT. And let's be clear, this isn't about your profit or the tax year, it's your total sales turnover. This catches so many growing businesses out, so please keep a close eye on it every single month. Now for the maths. But don't worry, I promise it's more straightforward than you might think. We just need to get our heads around two key calculations: adding VAT to your prices and taking it off your expenses. Okay, so how do you add 20% VAT to a price? Easy. It's a simple multiplication. You take your price before VAT, the net price. Let's say you're a freelancer invoicing £500 for a job. You just multiply that by 1.20. That gives you £600. So the invoice you send your client will show the £500 fee plus £100 of VAT for a total of $600. Simple as that. And what about working backwards? This is what you'll be doing for your business expenses to figure out how much VAT you can reclaim. You just take the total price you paid, the gross price, say £360 for a new bit of office kit. This time, you divide it by 1.20, and that gives you the original net price of £300. The difference, that 60 quid, is the VAT you can potentially get back from HMRC. Okay, I need you to really listen to this because this is the single biggest, most common mistake people make. Let's say you have a receipt for £120. If you just subtract 20% from that, you get £96. That is wrong. Why? Because the original 20% VAT was calculated on the net price of £100, not the gross price of £120. The only correct way to work it out is to divide that £120 by 1.20. That gets you back to the true net price of £100. Please burn this into your brain. Always divide, never subtract. All right, now for the part that makes all this admin feel worthwhile. Getting money back from HMRC. If you're VAT registered, you can reclaim the VAT you pay on goods and services for your business. This is known as your input VAT. So, what's the deal? What can you actually reclaim that on? Well, HMRC has some pretty clear rules, and the main one is this: the purchase has to be for business use. You can't just claim it back on everything. Let's have a look at some common examples. Generally, you can reclaim VAT on a whole host of business costs. We're talking about things like the fuel for your van, any repairs or maintenance, your office stationery and computer equipment, and expenses from business trips like train tickets or hotel stays. And yes, you can even reclaim the VAT on your accountant's fees. We're helping you sort all this out. But what about things you use for both business and personal life, like your mobile phone or the internet at home? Well, HMRC is really clear on this. You can only claim for the business portion. So if you figure that half of your mobile use is personal, you can only reclaim half the VAT on your bill. Same goes for your home office. If it takes up, say, 20% of your house, you can reclaim 20% of the VAT on your utility bills. Just make sure you've got records to show how you worked that out. Now, it's just as important to know what you can't reclaim. Obviously, anything that's purely for personal use is out. But here's the big one that catches everyone out. Business entertaining. Taking a client out for lunch, you cannot reclaim the VAT on that. And, crucially, you can't reclaim VAT on any costs that relate to making VAT-exempt sales, which leads us perfectly to our next section. Right, stay with me here. This next point catches so many people out, and it's one of the most confusing parts of that. On the surface, zero-rated and exempt things look the same, right? Because in both cases, your customer doesn't pay any VAT. But for your business, they are completely, fundamentally different. So why should you care? Well, because this difference has a direct impact on your bottom line. It's the deciding factor on whether you can reclaim VAT on your business costs, and that can make a huge difference to your profit. This isn't just boring accounting jargon. Getting this right is key to your financial health. Okay, let's break it down. A zero-rated item, like children's clothes, is technically a taxable supply. The tax rate is just set at 0. Because it's still inside the VAT system, the business owner can reclaim all the VAT on their costs, like their rent and electricity. But an exempt supply, like insurance or private education, is completely outside the VAT system. And because of that, the provider cannot reclaim any VAT on their costs. That difference is absolutely massive for your cash flow. So, we've covered the theory. Now for the practical side of things. Let's talk about deadlines, digital systems, and the classic mistakes you really need to avoid. For most businesses, you'll file your VAT returns every quarter. The deadline to file your return online and make the payment is 1 month and 7 days after the end of that quarter. So, as you can see for 2026, the deadline for the quarter that ends in March is the 7th of May. Missing these dates leads to automatic penalties, and trust me, you don't want that. Get these dates in your calendar right now. And here's a rule that is absolutely non-negotiable. It's called Making Tax Digital, or MTD. It is now mandatory for all VAT-registered businesses. This means you have to keep digital records, and you must file your returns using MTD-compatible software, like Xero or QuickBooks. You can't just fill out a form on the website anymore. Make sure you're set up for this. Let's just quickly run through those common pitfalls one more time. Number 1, as we said, trying to remove VAT by subtracting 20%. Remember, you always divide by 1.20. Number 2 is getting zero-rated and exempt supplies mixed up, which means you either don't claim VAT you're entitled to, or you claim VAT you're not. And finally, charging the standard 20% on something that should have been 5% or 0%. Always double-check the correct rate. So, to wrap it all up, here are the golden rules. Know your rates, 20, 5, and 0%. Always use the correct formula. Multiply by 1.2 to add that, divide by 1.2 to remove it. Keep accurate digital records for everything. Understand that critical difference between zero-rated and exempt. And whatever you do, never miss a deadline. Get these right, and you'll be in a very strong position. Now, just before we finish, a quick but very important note. The information we've gone through today is for general guidance, and it's all accurate as of February 2026. But tax rules can and do change, and every business is unique. So please, don't use this as a substitute for getting proper professional advice that's specific to you. If you need advice that's specifically tailored to your business, we really do encourage you to speak to an expert. The team at My Tax Accountant are ready and waiting to help you get it right. You can give them a call on 0208-570-8531 or drop them an email at info@mytaxaccountant.co.uk. And finally, if you found this guide useful, there are plenty more where this came from. Please do take a moment to subscribe to the My Tax Accountant YouTube channel to stay up to date. Thanks so much for watching.